We're here in Monte Carlo for the Rendez-Vous de Septembre. For AM Best TV, I'm Richard Banks. And I'm joined now by Erica Davis and Anthony Cordonnier, who are both global heads of cyber for Guy Carpenter. Welcome.
Thank you.
Thank you.
So cyber has shot up the agenda for insurers and reinsurers in recent times, but how well understood is cyber insurance?
Well, I think there's still a challenge for organizations to really understand cyber risk, and that's the full scope of the exposure, but also how best to protect themselves. And I think as an industry, we've struggled to define the product and really make it a tangible purchase for them. I think we're still in a phase where businesses are struggling to fully understand what's at risk and how the product would respond. And it is an intangible product geared for intangible assets, and so that's hard for some organizations to adopt cover for.
So if you think about the cyber product and how losses have impacted the market in recent years, then the cyber product used to be a privacy focused product with impacting larger organizations, and now seeing recent loss trends like ransomware, it's really brought the product to life, and smaller businesses see that they could suffer from cyber losses as well as larger companies.
So in terms of the understanding of it, obviously there's the understanding of it from an underwriting perspective, but also from a customer perspective. Do customers understand what they're buying?
I mean, I think that's the issue. I mean, only about half of organizations globally purchase a standalone cyber product. And so we're trying our best as an industry to raise awareness on the key issues. But no, I think many organizations still do not fully comprehend what the product is designed to cover.
And I think I would add to that also, the products, needed some time to develop and to be understood and known. And I think we're getting to the stage now that there is some standardization of the products, and it's a little bit clearer for buyers what they're buying. There's still a lot of work to do on that, as Erica said, but I think we're getting to the point where there is such a thing as a cyber product.
And I think, as Anthony said too, I think ransomware played a big role, right, in terms of there being headline losses, it being an exposure that impacted organizations of all different shapes and sizes, industry class, revenue bands. And so that is an area where we saw the product respond, and more sort of loss examples be known in the industry.
So we've seen some new capacity come into the market. How much is enough capacity coming into the market?
Yeah, it's a good question. So on the insurance side, we have had a number of new entrants who have come into the market over the last several years. And given the capacity constraints that existed on both the insurance and reinsurance side, it was a really opportune moment to do so. And they've been able to grow quickly. They've been able to embrace the need for capacity. Certainly the retail brokers have enjoyed having new carriers operating in this space. And so that's been really good for the industry as a whole. I think on the reinsurance side, capacity is also very constrained. We have been able to support the growth strategies of our clients, and so it is available at this time. But I think there's a lot to be done over the next couple of years so that we can continue to support the growth in the market.
Yeah, and I think that the dynamics of the direct markets that's created that opportunity. Of course, on the reinsurance side, the market is also hard, and therefore there's a capacity constraint. Cyber is probably the most reinsured class of business, so reinsurers have a big part to play in this. But to Erica's point, what we're trying to do is bringing additional capital to the market, be it on the traditional reinsurance basis, but also bringing through innovation, through alternative products, through cat bonds and the like, and that's bringing that additional capacity to support the growth of the market.
And I think too, I'd maybe just add that given the hard market conditions that have existed on the insurance side, there have been a number of new reinsurers who are interested in supporting the market, who previously hadn't been players on the reinsurance side. So that's been an encouraging sign for us.
So the reinsurance dynamic in cyber is important. How does the industry protect against accumulation risk?
So there are three ways in which reinsurers are supporting the market. First, capital relief. Second, earnings volatility. And third, tail protection. So to your question on accumulation and tail protection, reinsurers provide cover for the most part on an aggregate stop loss basis, and there has been growing capacity on that basis being provided to the market, and we've seen growth anywhere between 50 and 100% year on year of the capital that's been providing to cedants. But of course, there is a limited pool of capacity, and the growth is not unlimited. So that cover is being provided right now. In addition, reinsurers provides coverage through quota share reinsurance, which is also providing significant tail protection. Now, the cyber market is fairly self-contained. We've estimated that for 2021, the global premium to be around 10 billion. Around 40% of that flows to reinsurers. So that's about 4 billion, and that will continue to grow.
So I think diversification, right, amongst the reinsurers will be really key, right, in terms of trying to hedge against accumulation. I think there's a lot of work being done on the insurance side as well, with new wordings being introduced. I also think a lot of times when we talk about accumulation in the cyberspace and compare it to other lines of business, we have to remember that typical line sizes with cyber are much smaller than they are with other lines of business. The max lines tend to hover around 10 million. So there aren't the massive limits deployed that we see across other classes as well.
So cyber is potentially one of those systemic risks that we hear about. How geared up is the reinsurance market to offer the protection that's required? Are there other solutions that might be required?
Yeah, so I think the first one is really the aggregate stop loss protections that I've mentioned, which have in the last 5 years really have become a fairly standard form of coverage for the cyber markets and the traditional reinsurance space. But there is clearly more to be done, and one thing I mentioned earlier was potentially around earnings volatility, and this potential there for event covers to be provided on for the cyber markets. Now, traditionally, that's not been a cover that's been available to cyber buyers, but we're spending a lot of our time actually thinking through such covers, talking to reinsurers, talking to clients, and meeting new capacity providers as well. So in the non-traditional space. So Erica and I, this week at Monte Carlo, will be meeting some funds and talking through the cyber opportunity with those guys as well.
Yeah, and this is an area where, Anthony mentioned event covers. There's a lot of innovation and product development that's needed on the reinsurance side as well. When we think about things like capacity and how we can attract more capital to this space, then we really need to drive new structures. We need to support our clients by having more focused approaches to particular scenarios or events that they're most concerned about, drive cost efficiencies in the way they approach their reinsurance strategy. And so innovation is very important on that front, particularly around attracting new capital. So those are some of the things that are top of mind for us in 2023. There's been refinements and advancements in the modeling that have assisted with that. So all of this, I think, is getting us to a more mature space in the cyber market.
And given that systemic nature of it, is this an area potentially where government intervention might be required in sort of backstop capacity?
Oh, yeah, that's an interesting question. There's a lot of work being done on that front. There's also a wide range of opinions of what's needed, how the insurance and reinsurance sector can lead those efforts. There are multiple efforts being undertaken. We'll see how successful those are.
Very diplomatically put. So you're global co-heads of cyber. To what degree is the market a global market, and what degree is it segmented perhaps by geography and by sizes?
So, there is a reason why we're in those roles, and I think that those roles are fairly unusual for a company like ours to have two global heads. And I think very much cyber is a global line, which is explained by how losses can feed through the markets. You can have losses impacting, or the same risk impacting, companies that are on the other side of the world. In terms of buying behaviors, there are some nuances, between geographies and perhaps between the US market and the London market in particular. But we find that many of our clients buy global programs, and many of our reinsurers also run global cyber operations. So we feel that our setup complements the way the market functions. And, from a purely operational standpoint, it really helps having, one person in New York, one person in London, supported by, really good teams as well, forming market intelligence, developing new products, and, supporting our clients to the best of our ability.
Yeah, I was actually going to say the same thing in terms of how it empowers market intelligence and like global depth. I feel like we're able to like share lessons learned and information more cohesively as a team with the way that we're set up. And, candidly, it's the way our clients think about the risk, right? Cyber risk is global to them. So we want to be set up in a way that mirrors the way they're approaching the risk.
Erica, Anthony, thank you very much indeed for joining us.
Thank you so much.
Thank you, Richard.
Really appreciate it.
For AM Best TV, I'm Richard Banks.